December 2001 Trade Alerts review. This is a review of 2021 and also December. December was by far my most profitable month of 2021. Overall, 2021 was an incredible year. We only had losing trades in two underlyings in PayPal and Zillow. And as of right now, January 6th, 2022, PayPal is actually profitable. So if you wanted to reflect back, then we have a small loss in Zillow, which I believe is going to be profitable over the next month or two. Yes, we did have, I would say about like 8 or 10 challenge positions that we had to roll or manage, but everything else was very easy. Besides like the 10 trades that ended up getting challenged, and then carrying forward Zillow and PayPal. And PayPal, as of right now, is profitable. And you'll see that in the January 2022 video. So going through all of the trades for December, good opening. S&P is up 48. So it doesn't look like there are any trades that day. The S&P was down. So that was really interesting. The S&P was up 48 and then it closed down 54. So that's an incredibly large volatility swing in the day. VIX was up 15%. VIX is currently trading around 31, almost double where it was just last week. There was tremendous volatility in the market today with the S&P experiencing a range of around 140 points. Wow. No trades. Yeah, that's why you don't want to trade too early, because let's say we had traded at the opening when the VIX was up 58, when the VIX was up around 50 and or rather when the S&P was up 50 and the VIX was down 10%. And then at the end of the day, you're already showing a large loss because the S&P was down 54 and the VIX was up 15%. So you're basically having the price action move against you, and you're also dealing with the volatility expansion. So that's why when some people are too aggressive and they trade too often, it really is a recipe for disaster. You have to be extremely patient and disciplined. December 2nd, 3 new trades in total. Sell far out of the money puts on Dollar General and Apple. One problem with trading low volatility is that even during a day like today, when the market is up a lot, some of our positions still can't be closed out for profit because volatility has increased so much. Those were put on. So yeah, so when you trade in low volatility, even if the stock market underlying stock doesn't move against you, if volatility expands tremendously, then that option that you sold for a low price during times when the VIX was low is going to end up showing you a loss, even if the underlying cooperates and the underlying market price doesn't necessarily challenge the strike price. So you definitely have to be careful in trading during periods of low volatility and during periods when the VIX is low. For example, Visa is up around 3%, but the December 23rd 175 put is still showing a paper loss as volatility stabilizes and the contract gets closer to expiration, then the extrinsic premium will fall off that option. Also, I know that we have the 185 PayPal put expiring tomorrow, but I want the extrinsic to fall off that option prior to rolling. Perhaps it'll expire worthless, but if I have to roll it, then I want to get the most advantageous roll possible. Okay, so here, so this must be a Thursday because if it expires tomorrow, then yeah, December 3rd, I remember, is a Friday. So here, just remember this, that you can roll it forward and reduce the strike price by $2.50, and I would have to finance it by selling call options, and I pick up a small credit. The $1.85 has 120 of intrinsic and $2 of extrinsic, and the extrinsic will fall off tomorrow. So Dollar General, closing trade and one new opening trade sold for $1.80 and bought back for $1.39. Then I sold a new position with a strike of 165. Amazon picked up 89 cents. Okay, the third, so calls on Google, so puts on Adobe, B plus grades. Okay, so here I rolled it 7 minutes prior to expiration. And I think that this is really important because I was able to roll it down by $20. And if you remember the trade from just the previous day, I was only able to roll it down from 185 to 182. And I would have to finance it by selling calls. Here, I was able to basically do a very similar trade, although sell a call option that has a higher strike and roll it down by $20 instead of $2.50. And I think the last time I would have collected a credit of 11 cents, here I was able to collect about almost 4 times as much, so over 3 times as much credit as well. So yeah, sometimes it pays to be patient and to wait. Rolled it down by $20. You may also want to sell 2 calls and close out the put, so you'd buy back the 185 and sell 2 of the 230 calls. Yeah, I mean that trade would have worked as well. VIX actually hit 35 on December 3rd. I think that's the recent high. Yeah, I don't remember it hitting 35 since then. So yeah, that's the recent high. S&P down over 38, but it was way off its lows. December 6th, adjustment for Adobe. So here I wanted to decrease the expirations because I wanted to get rid of positions. And actually all of them turned out to be good decisions. I decreased the expiration, rolled it in by a week, rolled this one in by 2 weeks, rolled this one in by 2 weeks. Pretty much I just rolled everything in and I sold calls. Rolled this one in by 2 weeks. Rolled this one in by 2 weeks. Sold an Nvidia put. New opening trade. Here I rolled down PayPal. New opening trade for Tesla. It's a lot of premium for selling a 500 put option. So why did I make those adjustments? The reason is that volatility is high and extrinsic is high. By reducing the expirations, I'm able to accelerate the extrinsic time decay. As you saw on Friday, we rolled the PayPal position down by $20 just by rolling it forward by 1 week and selling 1 call. And then actually, I bought back PayPal. Closing trade for the 185 put that we rolled to 165. I made all the trades this morning to reduce expirations because once the extrinsic premium falls off, it's very easy to roll options during periods of high volatility. I also want to start trading more heavily in Dollar General, Apple, and Amazon. Sold Microsoft, B plus grade, Nvidia, bought it back. Provided a decent profit in just a few hours. Tesla, S&P up 53, December 7th. Small opening trade, Dollar General. Closing trade on Goldman. December 7th, one of our most profitable days this year. We profited from both the directional help and the volatility contraction. S&P up 95, VIX down 20%, VVIX down almost 15%. December 8th. So here, I wanted to just pick up. I sold the SPX for a decent amount of premium. S&P up 14. So that's actually really encouraging because it was up tremendously the day before, and then they followed up with being up 14. BlackRock, new opening trade, B plus grade. Tesla down 14. December 10th, new opening trade on Tesla. Close out Dollar General. So it looks like I closed out one of them. PayPal, new opening trade. Sold the 155. Nvidia, sold the 202. Okay, sold, open a new trade in Nvidia and also Amazon. Both are B plus grades. S&P up almost 45, so that's 4 days and 4 days out of 5 that it's up. December 13th, bought back SPX. That's a big winner in just a few days. 85% profit. So there was a big volatility contraction with the VIX trading at a close to 20, and previously the VIX hit a high of 35. I think that was December 3rd, so that was like 10 days previous to this. Bought back Goldman. Closing trade on Facebook. Those are the originals. Adobe. Closing trade. Nvidia. Closing trade on the bottom. Then open a new opening trade on Nvidia. So I close out Tesla and then I open up a new trade in Nvidia. Nvidia is a B plus grade. Small adjustment on Apple, which is optional. New opening trade. S&P down 43. December 14th, S&P down 25. New opening trade on Adobe. New opening trade on Blackstone. New opening trade. S&P down 35. We are up money, whereas the overall market was down quite significantly. All right, December 15th, new opening trade on Amazon. B plus grade. PayPal. We rolled it to 190, so we were able to reduce the strike price by $5. And then we financed it by selling 3 of the 155s. And then we also picked up a credit of 29 cents, so $87 of credit. And then we also reduced the strike price by $5. So we picked up $1,500 of price improvement there. And actually that trade, it's going to expire tomorrow. Hopefully. I mean, right now, PayPal, I think, is trading at about 192. And I actually haven't touched that trade. So hopefully it expires. Potentially I'll have to roll it tomorrow. We'll see. SPX, close that trade out. S&P up 76. December 16th, sold Adobe and bought back Goldman. Sold for $60 and bought back for $15. I rolled PayPal too early. Adobe, bought it back. Microsoft, sold the 255s. Sold the 2500. I should have sold more of those Amazon positions. That's a lot of premium. 2500. And I picked up $520 per contract. Definitely should have sold more. New opening trade, B plus grade. S&P down 41. 17th. So I remember December 17th, we had a ton of positions expiring worthless today. All right. So we rolled the December 31st to January. We picked up $2,000 of price improvement by reducing the strike price from 210 to 205. And then we financed it by selling some options. New opening trade in Goldman. S&P down 48. Excellent day for us. We were about even on the day, whereas the S&P was down 1%. Also, we had a ton of positions expire worthless. We rolled PayPal and also opened a small position in Goldman Sachs. December 20th, VIX up around 20%. VIX is now up less than 10%. So S&P down around 53. From watching the price action, I'm a bit surprised that the S&P didn't rally more, since volatility acted like this drawdown isn't a big deal. At one point, VIX exceeded 27, but closed below 23. PayPal actually was down around 183. Having it around 190 would make things easier for us. December 21st. S&P up 81. The 22nd, new opening trade on Amazon. 320. I picked up $320. It's decent. Probably could have gotten more premium. Adobe, S&P up 47. Yeah, see, there's a huge volatility contraction in just a few days. So VIX intraday spiked over 27 just 2 days prior to this, and now it's trading below 19. And that definitely affects the amount of premium that you're going to collect significantly. I mean, you guys saw that I was able to collect over $5 for a 2500 strike on Amazon, and now I'm collecting only 60% of that. The 23rd, closing trade of Microsoft, captured 60% of the premium. Amazon, I mean, a strike price of 2100. The likelihood that that trade gets challenged is probably like, I don't know, 0.2%. I'm just guessing, but that trade, I'll just close it out for a profit in all likelihood. NVIDIA closed for about 60% premium capture. Tesla's up almost 20% in 3 days. S&P up 29. The 27th, closing trade, Dollar General. Captured about 90% of the premium. closing trade. Original is above, closing trade original is below. S&P is up, but VIX is also up, so it seems like the market may be a little bit extended, overextended to the upside. Amazon new opening trade picked up $6.40. Bought back Apple, original below. Capture 50% of the premium. S&P up 65. $28. I checked all the trades from yesterday, and this Apple closing trade also wasn't received. All right, original is below. Goldman, bought back Goldman. Captured 60% of the premium. S&P down 5. 29th, decent day. Opened up May, picked up $1,400. S&P up 7. The 30th. Decent opening, not much volatility. PayPal's up around $3. VIX is below 17. S&P down 14. 31st, new opening trade in PayPal. Picked up an extra $1,200 by selling Amazon. Sold some calls in Zillow. S&P down almost 13. This year has been very good. We had 2 losing trades in PayPal and Zillow. I expect PayPal to show a profit within 2 to 6 weeks. Actually, it's showing a profit right now. But still, I mean, it's pretty much like break even. Small profit, not really that much. And Zillow to be profitable in a few months. I really haven't aggressively sold premium in Zillow, primarily because I've been focusing more on PayPal. And the Zillow expiration, I think it's like May or maybe even June. So I'll address that later on. And then I sent like a long voice recap. All right, so I'm not gonna play that because it's for my subscribers. And then that's pretty much it. Actually, yeah. So January 3rd, our PayPal position became profitable. So one day after the just one day after 2021 closed. But then also like PayPal pulled back earlier this week, like on January 4th and 5th. So even though January 6th today, it was up tremendously. But yep, that's about it. So 2021 was a great year. And there will be some slight modifications to my trading in 2022. I think that I got some of the positions that ended up getting challenged, even though we made money on it, such as Snow or Zillow, which we're actually not profitable on Zillow yet. But some of the other trades like Snow or Airbnb or even Uber, or what were some of the other ones? There were a few others, but basically, or even like Alibaba, which was profitable. I'm not going to make those trades in 2022 because even though I made money on them and they showed us a decent profit, it just really wasn't worth the stress. Additionally, I might consider using some stop losses just because the stress of having a managed position for some of my followers, they just don't handle stress very well when a position gets challenged. So I think that for those people who get very stressed out when a position is challenged, I think that they would be better suited to using a stop loss. For me, I've been trading for a long time, and I don't get stressed out when I have in the money positions because I feel very confident in being able to roll and manage that position until it's profitable. But for some newer traders who don't have that experience, they do end up getting like very stressed out. So I think that it wouldn't necessarily be bad to use a stop loss. Like I definitely think that having a stop loss is going to end up reducing your win rate. And I do believe that it will decrease your profitability. However, I also think that having a stop loss will protect you against some of the tail risk events. Now, stop losses will not protect you against gap risk. So gap risk is overnight risk. So if the S&P opens like down 5% from the previous day's close, then a stop loss isn't going to protect you from that, but it will help protect you from some of the tail risk. Some of the tail risk, just not the gap risk. So that's something that I might experiment with. I personally don't have an issue with having a few trades that have to be managed throughout the year, but also I have to ask myself whether it's worth the stress, because even though we made money on trades from Alibaba and Snow and Airbnb and Uber, etc., I'm not really certain if it's worthwhile. So I might make some changes and you'll be able to experience that and see that firsthand in the monthly recaps that I post. I would highly recommend that you enroll in the trade alerts. It's only rather $19 for 7 days. You can enroll at beststockstrategy.com/memberships. This was really an incredible year. And, I definitely do not expect 2022 to replicate in the overall stock market, because the overall market was up about like 30%. I definitely don't expect that the market's going to increase by 30%. I think that from our perspective, we can consistently target around 3% a month, and actually having the market trade about flat or even go down slightly is the optimal trading environment for us. So if the market decreases around 5 to 10% in a year, that's actually the most optimal trading environment for us, because if the market were to decrease about 5 to 10% in a year, then I would expect the VIX to be trading above 20 for much of that year. And during those type of environments and those type of situations, then we could actually exceed 3.5 to 4% a year, or rather 3.5 to 4% a month in targeted returns. Now that gets a little bit tricky because when you sell options, you want to make sure that you try to avoid like very large volatility spikes. So during periods when the VIX increases from like 15 to 45, then that could be problematic for option sellers, because all of your existing positions that you sold during periods of low volatility are then going to be showing you a paper loss, and you might actually have to manage them, and you're also going to have to manage your buying power. However, if it's like a slow grind down market where the S&P drops 5 to 10% over the course of the year, then during a slow grind down market, that is the type of market where we're gonna have the most alpha and the most outperformance. Where I do believe that in that type of market condition, where the S&P were to drop like 5 or 10% over the course of the year during like a slow grind down market, 40 to even like 50 to 55%. So we'll see. And I definitely recommend that you enroll in the trade alerts. I appreciate you following me throughout the journey for 2021, and it's not going to stop. During 2022, I'm going to continue putting out these videos. If you have any questions, leave a comment below, and please like, comment, share, and subscribe. And I definitely appreciate your attention. And please let me know what you learned in this video as well. And yeah, I mean, that's pretty much it. I think that this was a great year for us, and I wish you a prosperous 2022. And thank you so much for following me on this journey.